Welcome to another episode of Clarity Edge, where we help you align with the primary trends so that you can stay on the right side of risk in global markets. Let's begin by taking a look at the Bitcoin. We've had some exciting, weird developments overnight here. Of course, we have I believe it's a 2-week ceasefire deal between the U.S. and Iran. They had a deal brokered with the help of Pakistan. The Strait of Hormuz is supposed to be open now. And what does this mean for the global markets? What does this mean for Bitcoin? Now, the first thing that I've noticed here is that I'm seeing some relative weakness on Bitcoin, right? So this right here is the price of the chart of Bitcoin, and I'm going to be adding the S&P 500 here, right? So if we add the S&P 500 to this chart right here, we see that obviously Bitcoin has been, the S&P 500 has been falling all throughout this time when Bitcoin was in a range. But then, of course, it's important to remember that Bitcoin was then falling rapidly while the S&P 500 was in a range. So here, what we saw most likely was, Bitcoin front-running at the S&P 500, which I believe is because of the fact that Bitcoin is very sensitive to liquidity, and the global liquidity we've seen is kind of topping out. And I want to make a longer video on that, explaining kind of like the macro picture that I'm seeing right now, but I don't have time to today. But what I wanted to show you here is that we've had a very, very strong move up on the S&P 500 here overnight with this move, obviously. But what we're seeing right now is Bitcoin is still range bound. Okay, so let me see if I can add the range here. Yeah, that's the range, right? And we're still within this range. Now, if we go to the S&P 500 and NASDAQ, we will obviously see that we have massive outperformance, right? The NASDAQ reclaims the previous range lows. We are now back up inside the range, testing that range EQ as resistance. The S&P 500 is actually getting above that resistance, getting above that range EQ, so looks very, very strong. I do think that we covered in the last video, we covered how the S&P 500 started showing some signs of strength here when it kind of broke out of this channel right here. And I said if we can get above this level, which is 6,600, we could likely get a push up into that range EQ area. And that's what we got, right? Very strong move here, a risk on move. Obviously, the market is pricing in the fact that oil is going to continue to flow now through the Strait of Hormuz, and the prices of oil might go down. Because of that, inflation might not be triggered too much to the upside, and that might price in more Fed rate cuts than what we did during the conflict. I haven't looked at the numbers of what's expected, but it's kind of, that's what we're expecting here. And of course, we're looking at Bitcoin, and it's quite weak. It's still very, very weak. We can't even get above that 72K resistance zone. So given the fact that I don't really think the macro situation has changed, right? What we had before the war in Iran, we still have, okay? And I do believe when I say what we have or had is the business cycle kind of topping out, right? We're in the late stage of the business cycle or early in the contraction phase of the business cycle. Actually, let me actually show you these charts right here. Let's go to this one. So this is the global liquidity cycle, right? And what we can see right here is that we have, and by the way, this is from I believe it's give me a second. All right, so this chart is from Cross Border Capital, and It's led by macro strategist called Michael Howell, and I do highly recommend that you go follow him on Substack. Really good stuff. This is not my analysis, this is not my chart, this is his chart, and it's a very interesting one. So what you can see right here is this is a 65-month wave, a sine wave overlaid on the global liquidity indices, right? And so what we get here is the global liquidity cycle. And when we say business cycle, basically what we mean is when the business cycle is at a low and it starts moving higher and starts expanding, when the business cycle is in the expansionary phase, money becomes cheaper, and there's more money in the system, there's more liquidity, and you can kind of summarize it by saying in a expanding business cycle, we are in a risk-on environment, and people want to buy more of the things they want instead of the things they need. And then when we reach a top in the global liquidity cycle, that's when we reach a top in the business cycle, and that's when things like interest rates on loan increase. It's going to be harder to get a loan. There's going to be less money, less liquidity in the system, and people are going to stop buying the things they want and instead buy the things they need because they're not as confident in the economy. And the Bitcoin, you will see, of course, have topped every time the global liquidity cycle has topped, and that's because Bitcoin is very sensitive to global liquidity. And you can see right here, we have already topped on the global liquidity index, and this happened with or without the war in Iran. Now, we can argue that the war in Iran, the closure of the Strait of Hormuz, and higher oil prices and pressure on upside pressure on inflation could perhaps create a scenario where it would accelerate the decline in the global liquidity cycle. But maybe it's just going to happen slower now. And we can see on Bitcoin right now that it's not. This is, I believe, why we're not pumping on Bitcoin, right? Because remember, the S&P 500 stock market already, not already, but still has the AI narrative going for it, right? Which Bitcoin does not. And AI isn't really going to be helping Bitcoin much, but it is going to be helping the stock market and all the Mag 7 companies and all the tech companies involved in investing in the AI boom. I want to show you something else here. This is the ITC business cycle. This is from Into the Cryptoverse, Benjamin Cohen. He created this indicator. Great analyst and great website, this one as well. I do highly recommend you go check it out. And I do remember, I think he has like a discount right now as well. Not affiliated with him, and I actually just copied this from his Twitter. Hopefully that's okay, but it's a very good chart, very good indicator, and if you want to play around with it, definitely go check it out. So basically what we're seeing here is almost the same thing, right? This business cycle indicator goes from back in the 1960s, which is this one does as well, and we can see that the peaks in the business cycle do align with the peaks in global liquidity cycle as well. And as you can see right here, we have already peaked in the business cycle. You see that these gray areas in the background are US recessions. I know I said earlier in the video I'm not going to dive into this, but I'm kind of doing it anyway because I think it's very interesting. So these are the recessions, the US recessions that almost always comes after a top in the business cycle. Well, according to this, it always comes after a top in the business cycle. This is the COVID one right here. We haven't had a recession yet. So my thinking is we're going to get a recession sometime during the contraction phase of this business cycle. It doesn't make a lot of sense to have a recession in a expansionary phase of the business cycle when global liquidity is picking up, right? It's when global liquidity is being reduced, when there's less money in the system. That's when we have a recession. So what happens when we have a recession? Well, Bitcoin is not going to pump in a recession. Bitcoin is also not going to pump in a declining global liquidity cycle phase. It could, right? But what I'm saying is it might pump up to 80 to 85K. Let me show you the resistance levels I have here on Bitcoin. I mean, we might come up and test this, 85K region, 80 to 85K region. But at that point, I think the stronger forces and the macro forces are gonna take a hold of Bitcoin and kind of guide it in the right direction where, you know, logic and reason tells us to go, right? Unless we're just going to flip everything around and we're not going to follow the pattern that we've seen for the last 100 years. Okay, lastly, I want to talk about the MVRV Z-Score indicator. So this line we're seeing right here, that's the MVRV. Okay, and the MVRV is a ratio between MV, which is market value, and RV, which is realized value. Now, the market value is basically the market capitalization of, not capitalization, capitalization, the market capitalization, I believe it's called, the market cap of Bitcoin, right? And that's the, how you measure that is simple. You simply calculate it by multiplying the current price of the total circulating supply. That's the MV, that's the market value. And then we have the RV, which is the realized value. And this is basically the value, the value of the specific coins when they were moved. So basically, when you bought your Bitcoin, that's your realized value. And then if the value is declining, that's the market value being below the realized value. And when market value is on average below the realized value, this line goes down. The figure is negative. So that's the MVRV. Now, what creates the MVRVC score is that it calculates the Z-score of the MVRV ratio, right? And basically, the Z-score is a way of looking at how far away a value has deviated from its average mean in terms of standard deviations. So what we can do is we can go into this indicator, flip on the Z-score of the MVRV line, and then remove the MVRV right here. And this is the Z-score of the MVRV line, which creates the MVRVC score indicator. Okay, so now what we're going to do is we're going to add the price of Bitcoin to this. This is the price of Bitcoin in orange at the top here. And as you can see right here, if we add all the Bitcoin bottoms in the history of Bitcoin, you can see that it aligns perfectly with the low of the MVRVC score. We have not come in to the buy zone on the MVRVC score. This is something I'm waiting for to more confidently say that we're not getting close to the bottom on Bitcoin. Something else that I want to show you guys is the weekly RSI. There's been a lot of talks about the weekly RSI because when we entered oversold territory on the weekly RSI in the last bear market, we then had a bottom. That's true, but we dumped 41.67% last time that happened. 41.67% is going to take us down to where? It's going to take us down to 44K for Bitcoin. And if we calculate the time that it took from RSI on the weekly to first enter oversold and then actually create a break of structure after creating the low, it took us about 41 bars on the weekly, which means 41 weeks, and that takes us to November of this year. Okay, so timing wise, cycle wise, and price structure wise, I do not think we are even close to the bottom of Bitcoin, and that takes me back to this chart right here. If we're going to come down to the 44K region or around the 42K support perhaps, this is going to take us down to this little island of price action right here, right into where I believe we're going to have that long-term accumulation phase for Bitcoin according to the Dow theory, where markets move in trends between accumulation and distribution. All right, that's it. I was just going to do a quick update on the price action of Bitcoin, but I dived into everything. Hopefully you enjoyed this little quick crash course on the global macro and liquidity conditions that I believe we are trading in right now. Thanks for watching, everyone, and make sure to hit the like and subscribe. See you in the next one.